Good evening, everybody. Unusual week or weather here in Pittsburgh. I think it went all the way up to 73 degrees today. Okay. This is a good time to illustrate observe the obvious syndrome. Notice up here in the overbought area, you're at a resistance level, and then we start seeing signals that we know what they signify. Indecision, doji, harami tells us right away that the selling or the buying had stopped. So what was the strategy? You kind of stayed long to see which way what they were going to do here at the 200. Obviously on Friday, they closed lower. The doji rule. So you add all that together, overbought area, right at a major moving average that everybody else is watching, and then they sell it off. So the only thing that would have said, maybe it's not a complete sell-off, was the fact that the Dow closed right at the T-line. However, when you looked at the other indexes, like the S&P 500, it had already closed below the T-line, or it closed below the T-line. So that was one confirming indicator or indication that they had failed at the 200. Then you had the NASDAQ, same scenario, doji, gap down below the T-line. These were all good, good solid indications that we know from candlestick analysis that the sellers had taken control. Now, what was the nail in the coffin? The fact that the indexes were closing below the T-line. And I've been trying to figure out if I was going to quantify that probability factor, I would put it at somewhere around 90% probability that if you saw a candlestick sell signal and a close below the T-line, a 90% probability or greater, and we're now witnessing a change of investor sentiment. ET, check your little microphone or your speaker and make sure that it's scrolled up toward the top of the range. And I think even the transportation index, yes, closed below the T-line. So let me see. That's the good trade setups are going to be the shorts. But let's work backwards. There are still some very convincing buy signals. Remember, whenever we see that indecisive day gap up, usually going to be some strong follow-through. Best friend gap up. Good follow-through. We also want to always identify the patterns. You can see what happened here on Kirk. You had your fry pan bottom breakout. And notice what they haven't been able to do so far on Kirkland. Haven't been able to close it below the T-line. So would I be buying aggressively? Not necessarily. Would I be holding positions that I might own? Yes, as long as it stays above the T-line. we can kind of calculate what our pattern setup is. There's the classic pattern. Oh, and it looks like WTI. And here's another observation that you always want to keep in mind, that if they come right down to the T-line that nobody has on their charts and bounces back up, that's telling you there's a natural support level at that area. ETU. Nothing to do here, except as long as you stay above the T-line, you're all right. And as long as you stay above the 3 T-line, you're more all right. So logic says if the T-line is acting like a natural support and resistance level of human nature, and the 3 T-line also has that characteristic, well, if they're above the 3 T-line, that means there's still a lot of bullish sentiment in that price move. So this looked a little bit dicey. As far as that big bearish engulfing on, what is today? Friday. They get ready that if they started trading this lower, confirming the bearish engulfing signal, you'd close it out. Still would have a safety stop below the T-line. And that's what emphasizes the rule, our T-line rule. You can stay long, as in Apple, until you see a sell signal and a close back below the T-line. Now what was so again, if we can see the market is getting hoppy, failing at a resistance level, that can be extrapolated into individual charts. Look at your doji, a long-legged doji, and Roku in the overbought area. So here's where the logic is very simple. If we know the doji rule, which means it's going to move in the direction how they open after a doji, that if we're in the overbought area, it's hit the 50 and it opens lower, what's it tell us based upon those rules? They aren't going in this direction anymore. It's time to take profits. So the 2+2 analysis is if the markets are starting to roll over and you see something like this, same scenario. If the market is selling off, and this is doing sell signals, look at your doji, bearish left-right combo, close at the T-line. What is our analysis at that point? Well, if they opened up positive and traded positive, all right, we're moving sideways. Maybe they're trying to bring it back up. If they opened it lower, they're confirming our left-right combo failure at the 200. And the fact that they gapped it down through the T-line makes it that much more compelling. The sellers are coming in with great force. Carson, no. Let's see. It didn't close below the T-line. But you did have your sell signal. Look at your bearish Harami, doji Harami, in the overbought condition, and it was starting to sell off. What other factor would you mentally made into that evaluation? What was your NASDAQ index doing? It was trading lower. Yeah, the market was selling off. The Apple was starting to sell off after a sell signal. Things were starting to get a little bit, let's say, compelling that things are starting to sell off. So if I had seen this, I was long Apple, and it closed here, the market's selling off, didn't close below the T line, I'm probably taking off half the position at least. What's the worst case scenario? I close out the position because things aren't looking good. If it opened positive and started trading positive, where am I? Still in an uptrending stock, up in an overbought area for a long time. I can buy back part of that position. Polls. This was a warning. Anytime you see them open near the previous day's open in an uptrend, not only in an uptrend, but up in the overbought area, what's that telling you? For some reason, the bulls aren't there anymore. Get ready to close out the position or part of the position. If they gap down toward the lower end of the previous day's trading that was in the overbought area, that's kind of taking the wind out of the sails that your bullish sentiment is starting to disappear rapidly. Here's another case where I would probably close out half the position, and then when they open it lower the next day, if I was long, I would have closed out the other half. That is an alert. That's your warning. Crocs today was a good short based upon kind of an evening star signal, kind of a bearish doji, a bearish doji sandwich, closed below the T line. It opened and traded higher. So if I had shorted here, the candlestick's heading down, we've got sell signals, we're trading below the T line, what should I anticipate? I should anticipate they're still heading lower. This just happened to be an up day. Or if I didn't short it today, what becomes a very logical, high probability entry for a short position? It comes back down through this open. That tells you the sellers are still in control. So knowing all these factors that we should have reversed, we're heading, the candlestick's heading down, we've got a sell signal, I guess kind of a dagwood, that the probabilities are we're heading lower. Now you add also the fact that the market indexes are not showing anything that's telling us we're bouncing back up yet, that the prospect now is probably coming back down or could be coming back down to test the 50. That's another indication that if I see this one open lower and start trading lower, if it comes down through today's open, a very high probability trade setup for a short. And let's see. And we shorted NVAX because this is just a common factor. Notice they closed below the T line and gapped it down. Well, probably wasn't a good place to go short. But what did this, would you short on a bounce and failure up at the T line? Let me go back there in a second. So what are these signals telling us right here in an uptrend? Pretty indecisive, not a very compelling uptrend. What did this tell us? Oops, they failed. Now what type of pattern do we have setting up? A bearish J-hook pattern. On Crocs, if it bounced up, if this opened positive tomorrow, with the market selling off, I'd probably close out a short position if I had the short position on. If I don't have a short position on, then I'm going to leave it alone. But if they come right back up to the T line and then start selling it off again, yes, that's a good place to go short. Now, that could be an aggressive short, or more conservatively, if it opens here, comes up, hits the T line, if it comes back down through the open, that's obviously a very good place to go short. All right, so another confirming indicator are the biggies. We can see what was happening in Amazon. Failure right at the 200, trading below the T line. The Cassic's heading down. All the makings of a downtrending situation. Where? Well, there's a gap to fill right here, which also would coincide with the 50-day moving average. So that's the likely target. We did Apple. NVIDIA. Not a clean sell signal in here. It's kind of a failure up here. So would I be shorting this one? Probably with the better charts that are showing strong sell signals. For example, like Netflix. Here's your doji best friend gap down. That's telling me much more compelling selling than something that was choppy and didn't really have any sell signal. So if I was going to go after a short on a biggie, yeah, Netflix fits that description much better than something that doesn't really have a sell signal, just a rolling over. And what are all the things we can add up on this one? Look where it failed. Right about where it failed before. So this is why we say if you're buying here, what do you want to see as far as this potential J-hook pattern? You want to see that it can break out through this level. If it can't, now what happens? You got a double top. And if you have a double top, if they fail to go up through there, what's the investor sentiment? The bears are saying, or the bulls and bears are saying, up, they're not going to new highs. This isn't going to work. Let's start getting out of this position. Okay, let's take a look at some obvious pattern setups. Apron. What's the pattern here? There's your classic pattern. Your fry pan bottom, J-hook pattern. And what else can you kind of utilize to tell you this was probably a good J-hook pattern setup? The fact that they did it right off the T-line. Carson, hold on. Now I'll do Microsoft since it's a biggie. Not a very good trader. Island reversal. Kind of an island reversal failure. Bearish Harami. Bearish doji sandwich closed below the T-line. Yes, you could still short this one on weakness. First target, 50-day moving average. All right, let's see. What was I doing? No. J-hook pattern. What gives us the impression there's a pattern setting up? Morning star signal. SGML. Again, there's your classic pattern. Fry pan bottom, J hook. And what's the signal here? Bullish engulfing, coming back up above the T-line. Just visual evidence that things are going positive again on this one. Same thing on MATV. Left-right combo, right smack dab off the 50. I'm sorry, right off the T-line. And do I have one more? I don't know. Okay. Oops. J-hook pattern setup. What's more convincing about this J-hook pattern? The fact that it came right down to the T-line and bounced back up with a doji hammer followed by a bullish engulfing left-right combo. So these are all, again, quick visual evidence that the bulls are definitely in control. It's still in an uptrend. All right, everybody was trading SWN this afternoon. Let's make this a little smaller. So that's a nice breakout J-hookish pattern, doji, T-line, and pretty much right up through this area. So that one definitely stayed long. Is that the Southwestern Energy or WTI kind of held up? And AU22. So it looks like crude oil been hovering here at the 200, not selling off anymore. So that might be a place where it's starting to support and head back up again. So is that what's happening? Is that what is happening? Who knows? That's kind of what apparently is being anticipated because they're starting to come back into the oil stocks again. Whoops, this is backwards. So there's our J-hook fry pan bottom doji sandwich breakout. Pretty good indication that this was in wave 3 going higher. And what is the confirmation that they broke out through this level? Does every fry pan bottom work? No, if we see something like this where it's broken out, where would you not want to see this trading? Definitely back below this level, because what did that tell us about our breakout? It didn't happen. So not only do we get ready for the strong trades, but we're also shouldn't be so naive that every good trade setup is going to work. We want to know exactly where the investor sentiment has changed, where it's not working or it's not a breakout situation. There's your classic pattern. Look at everything you could add up on this chart. A big fry pan bottom. What was all the evidence that this fry pan bottom was bottoming out? A morning star, right smack dab off the 200. A couple more times where it just bounces up off the 200. Now they do kind of a little mini doji sandwich up above the T-line, and we can, at that point, start seeing a trajectory. Is a fry pan bottom being potentially developed for crude oil? Nah, just support and everything. So what do we expect coming out of a fry pan bottom? A strong price move. What's our prerequisite for a J-hook pattern? A strong price move. So even if we get up here and we start taking profits, we can be buying back here because what can we see as our pattern setup? J-hook pattern followed by a fry pan bottom followed by a J-hook pattern. Oh. Where was it? Huh. I actually put this up because of a bullish flutter kicker signal, but I can't see it. Maybe it was right there. Okay, so again, one of your strongest signals and patterns is the best friend signal. That's why something like this, even with the markets tanking, is always going to create or has a high probability of creating a strong price move, no matter what the market conditions are. Okay. Here's another case where they haven't been able to close this below the T-line. This is a Canadian solar. Whoops. So I have this out of place. So what's this one look like it's trying to set up? There's your fry pan bottom, maybe your J-hook pattern, maybe your J-hook bobble breakout. So you keep this on your watch list to see if it further confirms the expected pattern setup. BRDN. This is a, I'll just get over here. Is I illustrating something else? Apparently not. But look at your kicker signal failure at the 200. What's the prospects on that one? High probabilities. They're coming back down somewhere. Now, when I say somewhere, likely down to the 50-day moving average. Does it mean that that will get there? No, that's the prospect. Well, that's the target. If we see a hammer signal right in here and they started back up, then we know that was the bottom and start taking profits if we're short. Another J-hook pattern setting up. Our LMD in the therapeutics area. Sprouts. J-hook pattern setting up. And how did this one start? With a left-right combo. So I'm pointing out these signals right here because if we know the signals are going to produce an expected result, then we can kind of anticipate the pattern that's being set up based upon those expected results. Well, something is wrong here. Well, moving this up. Well, for crying out loud. There it is. Okay, they must have taken this one up after hours. Oops, they did. But that wasn't, something's wrong there. That's a, I can say that's a cradle pattern, but apparently there's something wrong there. Okay. So those are the potentials of going long if you aren't comfortable with going short. However, what are the probabilities? Probabilities are that if the markets are heading down, there's probably some better short positions than trying to find long positions that might be fighting the trend. I'm goofing up something here. What's going on? Is that what AMC did today? That's not even close to am I on the right chart? I got to be on the right chart. Something's wrong. I don't know what's happening here. So I'll zip right along. Carvana. There's your bearish doji sandwich. And this is after bottoming out after an extended downtrend. Looks like it was basing. But what did this tell you? That basing has failed. So if you had been long, what happens to our, was that what, okay. Yeah, something's wrong with the chart on that one. So Carvana, this is why you always want to use the T-line rule. This looked like a fry pan bottom setting up until they closed it below the T-line. For the fact that it pulled back, did an indecisive day at the T-line. If you were long, what was your only criteria at this point? It had to open positive and trade positive. If it opened lower, you closed out the position. Zoom. You can see what's happened here. This is why you want to see where add your analysis of the signals and patterns based upon what everybody else is watching. So if you can draw a support line right up through there, and they did a bearish doji sandwich through that level, that's pretty good evidence. Not only, I'm sorry, not a bearish doji sandwich, a bearish flutter kicker through that level. That's telling you this kind of wedge area is broken with a strong, forceful sell signal, making it that much more reliable that the downtrend's in progress. This is where you start looking that if you're in the overbought area and the markets are starting to roll over, you don't necessarily have to wait for it to close below the T-line, even though that was your final nail in the coffin. You had shooting star, bearish engulfing, hanging man. Yeah, that's telling you that trajectory is not working anymore. The market's heading down. Let's close out the position. Now what do we got going? Now you can see the signal, a bearish doji sandwich what would be your expectations at this point? Probably coming back to test the moving averages. C-Day, same scenario. OPRT, here's a good example. Too many lines. A good example of that kicker signal. Remember what the kicker signal illustrates. There's been a drastic change of investor sentiment, and it's probably going to have some follow-through. Xerox, there's your bearish flutter kicker signal. Failure at the 200, next target. So again, the reason I keep commenting on observe the obvious is that when you know what the signals are telling you, and you know what it's doing at your support levels and what the rest of the market is doing, this becomes a heck of a lot more obvious that they're starting to sell this one off with strength because of kind of the bearish flutter kicker closing below the T-line. The Stochastic's rolling over. That just improves the probabilities that the bears are taking control. MDC, you can see this one rolling over, failing at this level. How far could this go? You might be looking at this target down here. Oh. I have no idea what I wrote there, so just skip that one. Lemonade, observe the obvious. When they did a bullish engulfing, broke out through this level, what would be your next obvious target? The 200. A Harami, kind of a bearish flutter kicker. What's that telling us? They failed, bearish doji sandwich. After a Harami, where do you think they were heading back to? Testing the 50. So with that in mind, I segued this. There's your rolling over. There's your bearish best friend. What did not hold as a support level? The 50. Where do you think the next target is? Down here. Wing, same scenario. You don't have to close if it closes below the T-line. If you see the market rolling over and they aren't doing anything, stochastic's getting weak, take profits. Because if you're up here, let's say you bought down in here somewhere, and it's doing this, and the market's rolling over and it's not showing any strength, what should be your first thought process? Is this the best place to have my money? Or do I need to be going and finding something that looks like this? Or if this market's rolling over, maybe I need to start looking at better short positions. The airlines. Again, there was your bearish best friend. Failure to hold the 50. You stay short on these. I don't know what the rest of them, I know the rest of them were getting weak. You know, Southwest Airlines, American, all of these. And so that's an additional confirmation that if you see a sell signal, I saw a sell signal in United and say, should I be shorting this one? Well, I'm going to go check the other airlines real quick. But I want to start, if all the other airlines are selling off, yeah, that's a good indication that I'm pretty safe to start shorting this sector. CGNX. There's your slow curve failure at the 50. More downside potential. Herbalife. Stay long until you see a sell signal and a close above the T-line. But what is your close above the T-line in this case? Your bearish best friend, gap down. First target, second target. Again, this is also adding into the fact that everything is selling off. Ford, little shooting star failure at the 50, pulling back somewhere. There's a gap right here. Could make that your next target. So we had quite a bit of stock in Ford with a long-term perspective, except today was a pretty good indication the market was selling off and Ford was not going up. Doesn't mean we're going to stay out of it. It means we're going to find a better place to come back in. Bearish kicker type signal. Here's a good illustration, once again, that if you're in an uptrend in the overbought area and they gap it down below the previous day's open, close it immediately. Because if we're in an uptrend, it shouldn't be gapping down below that overbought candle open in the in an uptrend like that. And PEGA. So what is the total analysis on this chart? Obviously, it's in a downtrend. And what are we seeing right now? Rolling over. And is there any other important level that it came through? Yeah, right in here, which was a support level. They hadn't held that. That means they're still selling this one off pretty hard. Okay, and a few more. EETF, same scenario. Which direction is this one going? In a downtrend. What is additional confirmation they're not buying? They came right up to the 50, which had been acting as a resistance level. And we see sell signals. What could be the assumption here? That if they break this level, they're still heading down. So we want to add, or at least I want to add, all the prospects of what everybody else is watching to see whether there's still more downside as far as the downtrend in progress. Wayfair. Oops, let's make this big enough where we can see it. So what do we got right here? Doji right on the 50 after a kicker type sell-off. What do we do with this one? Well, if this opens lower tomorrow, what's it telling us? Telling us the Doji rule, they're still moving in this direction, and they're not supporting this level. We got the potential of another big down day for a good short position. And Dave and Buster's, kind of your best friend gap down. Again, after an alert that said they closed it up here and they gapped it down the next day toward the lower end of the range, Doji. Now the Doji rule, first target, second target. So everything I try to do, we're in an overbought area. 3, we're coming back below the T-line. That tells us something has changed in investor sentiment. Whoops, that's not what I want to do. All right, so it's showing that the future's up a little bit, which means there's nothing there yet. So I would suspect they're still selling this market off until they hit a support level. And these, You know better. You don't look at something until I tell Jim to do the double line. All right, so are there any general questions on candlestick analysis? A best day trade setup? There's a couple. For example, what were we just looking at? Wayfair. Wayfair, we know the doji rule. That if it opens lower, it's probably trading lower. If it's opening lower and trading lower, what type of day could we have? That same day right there doing a bearish doji sandwich. So not only can we see with a high degree of probability what happens if it opens lower because of the doji rule, now we have something that we can calculate. A bearish doji sandwich would bring us down into this range, and that would be a substantial day trade. Same thing, I don't see one, but a flutter kicker signal. And I can't remember any. But a bullish or bearish flutter kicker signal is an excellent day trade setup. And then also, depending on which way you're going, a bullish or bearish bobble breakout. Let me see. Oh, there's the bobble breakout. Or on this day would have been, want to be trading in a positive direction. So if I see something where they came up, and let's say they came up and closed right on that breakout level, if it opened positive the next day, it becomes a very high probability day trade setup. Jim, you still have to take that into consideration. The strongest bullish signals at the appropriate place. Do you have one to point out? That I would still be, if I saw the markets are selling off hard and I see a strong buy signal. For example, there's a left-right combo, bobble for a J-hook pattern setup. Would I be buying this one on positive trading tomorrow? I'd probably be more apt to find, if I thought the markets were heading lower, going after a short position. Again, I want to go where the probabilities are putting things in my favor. Now, does that mean if you, as they even say, even if you saw an inverted hammer and it opened positive the next day and the market's trading lower, I'd still probably wait to see what it does by the end of the day. Is there a way to tell if it's going to be a wide range bar or doji day? Nope, not really. All you're doing is expecting the probabilities. What one was, we had one that was a kind of a double doji sandwich. Yeah, all you can do is anticipate what might happen based upon one, seeing the, let's say, a trade setup like a doji sandwich setup, a big candle, a doji, and then if the market was opening positive, still continuing an uptrend, and the stock was opening positive, yeah, you could anticipate that you were going to have a doji sandwich day. That would be the anticipation. That would be the expectation. Does it always happen that way? Not necessarily, but the probabilities are what we're going after. That is a good place to be buying. P.S. I always want to trade in the direction of the market. Again, it's, first of all, on a day trade, you want to be correct on your entry, and then you want to be correct on your direction, and then also the magnitude of your direction. So if you're buying something and the market's going down, you're kind of taking one of the spokes out of the wheel to make improve your probabilities. So on this one, what is the one element that says this might not yet be an inverted hammer? The fact that your stochastics aren't in the oversold area yet. So that would be something that would put up a little red flag to say, well, maybe this isn't the bottom. So if I was looking at this one, with this still heading down and it opened positive, I'd probably want to be a day late. I'd rather see this close positive, telling me they did confirm an inverted hammer with the market heading down, and then go after it. I don't necessarily have to be buying right at the absolute low. I want to be buying someplace that tells me the probabilities that are that it's working, and I want to be taking the fat part of that trade. Okay. So right now, with this type of trajectory, now this is why I always tell myself you don't need to be an analyst. But what is the assumption that we can kind of add to our analysis of what the market's actually doing? Well, maybe the fact that there is inflation out there and they're going to have to do something about it, and everybody knows about it. It's not surprising to see bounces in a market trend, and then reality sets back in and heads back down. Now, is that the reason why it's heading back down? Have no idea. Don't have to know whether that's the reason. All we know is that they're selling this off. And it's pretty, what do I want to say? Pretty something or other that if the market's heading down, all the talking heads have reasons for it heading down. And then if it turns around and heads back up, a whole another set of talking heads tell you why it's heading back up. So most of the experts I see are excellent in telling you what's happening after the fact. Inverse small cap. Yeah, what's that for RT? Yeah, so you could be buying this one, the small cap bear fund. Okay, I guess with that, Jim, go ahead and do the double line. And in 4.2 seconds, do the next double line. BE, yes, stay short. EMBC, if you're long, you can stay long, but you can see it's not really doing anything. Just stay long, have your safety stop below the T line. Oak, that one, rhetorically magic. Which direction is this one moving? Don't really know. So if I held on to it this long, and I was long, I've only got one choice. It has to open positive and trade positive to stay in it. Micron, you could go short. You're right in this area. But if they break that, on the last support area. LQDA. It's holding up, Again, there's your fry pan bottom breakout. There's your J-hook pattern. If I was long, I would have a safety stop at today's open, which probably tomorrow would coincide with the T-line. After hours on Zoom. Okay, hold on. Go back to there is something wrong with that chart. AMC doesn't look anything like the AMC over on CQG. Now I forgot what I was doing. No, Zoom. Oh. Yes, so there's what happened after hours. Regular hours was like this, and then after hours, they slammed it, okay? So obviously this level did not act as support anymore. There's your potential J-hook type pattern and the fact that they haven't been able to close it below the T-line. You stay long. 9, stay long. This one, stay long. Good strong charts. H-cat. Nothing of any great consequence. Even if it gets up through the T-line and needs to get up through this level, probably I'd put it in the category of not being long or short on this one. Unless you really like it, you can buy it on positive trading, but it doesn't have anything extravagant. Nice big move. Remember, the bigger the signal, the more compelling, so I'd look for at least a 45-degree, the original trajectory. IMVT, there's your J-hook bobble breakout. And again, look at the added confirmation that they came right smack dab to the T-line. When I use that professional term, smack dab, it means they've come right to a level that nobody else has on their chart. But the T-line is an indicator that says that's where the bulls are in control. They come right to that level and take it back up. That's a pretty strong case that the bulls are definitely staying in control. There should be more upside coming out of this bobble breakout. Don, I'd put that almost in the category of not only a J-hook, but a bobble breakout. Failed here and then went up through that level again. DraftKings, I would stay short. Left-right, bearish left-right combo, failure at the 50, the gap down through the T-line. If this opens lower tomorrow, who was asking about a day trade? If this opens lower tomorrow, you probably have the prospect of a doji sandwich, making that a good short trade on a day trade basis. Is Tech a strong, viable chart with left, right off the T-line and 200 J-hook setup? No. Not yet. I'd be more apt to buy it above that level, proving that a J-hook pattern was in progress. MRSN, that's got the prospects of a J-hook pattern setting up also. This is your alert. Gap up, breakout, strong new interest, and then profit taking. What's the worst case scenario? More than likely it could be doing a 45 degree. Better case scenario could be doing a J-hook pattern. Good year, bearish chart, first target, second target. And Under Armour, bearish chart, doji gap down, below the T line. Failure to hold here, where's your next logical target? Right here. Then you see what it does at that level. CPRT, you could still short this one on weakness tomorrow. Failing to hold at the 200. Another slow curve, gap down. You could short this one, especially if it comes down through the 50. Then your next target is probably back down here to the support level. Deer, it's holding up, that's for sure, in this type of market. If you're long, you stay long, and your safety stop would be at today's open. If it came back down through there, they aren't going anywhere. INDO, that's a kind of a breakout. If you're long, stay long. If you're thinking of going long, you still buy this one on positive trading. Camps. Oh boy, there's nothing there, Kathy. If you're short, it has to open lower and trade lower tomorrow. If it opens positive, you close it out. But I wouldn't be going long until it confirms that it's going to stay up above the T line. This is gold. Stay short. This is even more. Let's see. What do we got? E. Yeah, that's gold. The October contract. You can see how it failed right up here. Let's see. CF, both engulfing off. Yeah, it's not a really an engulfing. That one's kind of a little mild J hook. And NER. Not that it's better. Now, neither one of them are better. They're both kind of telling you so far they're not able to close below the T line. And CRISP, stay short. And another case where if it opens lower, look for a possible bearish doji sandwich. That's how we did this one, right? Now, this one you can be buying on positive trading. We did in vet. You could be buying this one because it's right here at the breakout level. If they're buying this one tomorrow, that means this level is not acting as a resistance anymore. EQNR, it did break out. anticipate you're in wave 3. That's a good one, Chip. Blue Apron. Did this one. Yeah, J-hook classic pattern. All right, thank you, Gary, on AMC. Okay, so this is what you want to be conscious of when you're looking at your trades. You say, well, I'm pretty long, and we're now at a level that I got to be a little bit more diligent. Well, they went through the 200, but the next day they did a bearish harami. Now I start seeing things are starting to roll over a little bit. I might lighten up on my long trade. Roku, you're just staying short. We did a put spread on this one in the last couple of days. And Myra, stay short. Same thing with Riot. Stay short. Match. Just stay short. Oh, to sell match, meaning to sell a long position or go short, Edwin? You could short this one just because it gapped down through the last support, yes. So you could short it. It's not the best place to be shorting. It's probably viable. But if you look back at this, where would have been a good place to short? Oh, after your bearish harami gap down below the T-line, or after your bearish doji sandwich setup. UVXY, that's the short fund. You can be buying this one. Okay. This one has the strongest sell aspects to it, where they've gapped down and gapped down. The Stochastic's just starting down. So I would suspect we're in a downtrend, and not only in a downtrend, but when they're gapping down, that means they're trying to come out of things with great enthusiasm. That's what creates the good short scans. All right, everybody. We will see everybody bright and early tomorrow in the chat rooms. We'll see you then.